Good day, good evening, good morning, depending on where you are at. This is yet another day that we are having a good time. We have said again and again that life is for living, and therefore I'm encouraged to know that you are living. It's my hope that you are living your life just like I'm living mine, in excitement and enjoy. Enjoy what it is you're doing in this world, in this life, because it is brief. So today I just want to speak about why people lose money in insurance policies. Have you ever lost instead of gaining? Why do people lose money in insurance? Is it possible to gain instead of losing? And if so, why do people lose money in the insurance policies? And I just want to share with you some of the reasons why people end up losing, and yet they had intentions to gain. You take up an investment and you have intended for it to grow and give you returns, and then you end up losing. I have experienced such a scenario. I know I've shared it before. I'm going to share it again. About 15 years ago, I took up an insurance education policy and an investment policy. And after paying for about 18 months, I came to a place of stopping to pay because my financial situations had changed. Like they do happen to everybody else, that you have ups and downs. So when my downtown came, I stopped paying. When I stopped paying, 3 years down the line, my scenarios were much better. And so I sought to continue. But then when I visited the insurance company, I was informed that it's not possible for me to continue to pay. And why was that so? That was because my policy had actually expired, and therefore I was not in a position to continue with it. So the options were either I start a new one afresh, or I just forget about the investment and just consider it a bad debt. So I want to share with you, why do people lose, yet they had very good intentions, like the ones I did have myself. And even whoever sold to me the policies, the insurance agent, did not intend me to lose my cash, in as much as they did not explain to me how I should be able to achieve the reason for which I bought. However, their intentions were good. They were giving me something that would help me. Number one, the main reason why people lose is lack of understanding of the rules of the game. Each game does have a rule or rules to play by, which if you do not follow, you are likely to be on the losing side, be it athletics, be it football, be it whichever kind of game you're trying to play, even if it's just, running across the country. We used to call them cross-country runs those days. Today, they are long distance. You still require to follow the rules and regulations that have been laid for that particular game for you to be considered a winner. And so in this scenario, if you do not understand what the rules and regulations are, chances are that you will not be able to follow them accurately. And so understanding, number one, is that you should understand what those terms mean. And what some of the terms that I want to explain is lapse. The first one is lapse of cover. What does that mean? That means that your cover becomes non-existent, or your policy becomes non-existent. Your investment becomes non-existent, and therefore you lose out. So it is important for you to understand at what point every insurance investment or policy does have a lapse period, after which it becomes nullified. It is good for you to understand at what point does my insurance become null and void? What are the reasons that will cause it to lapse, or to cease, or to stop functioning, or to become non-active? So once you understand those terms, and each insurance policy does have a different reason as to our different parameters where they consider it lapsed. So for your specific one, please do understand, why does it lapse and at what point does it become a lapsed cover? Because when it does lapse, you cannot reinstate it. You cannot go back and resuscitate it. You cannot go back and rearrange it and do it again. Once it lapses, that is it. Be it an investment, even if it was just a general insurance cover, such as medical or even motor vehicle cover or property cover, whichever cover it is that you have taken from the insurance industry, it does have that term called lapsing, which you must understand at what point is it considered lapsed. If it is a medical insurance cover, for instance, most of them do have a length of 30 days after which it lapses. And what that would mean is, after those 30 days, you will start afresh. If there are any waiting periods that were imposed on you, they will start all over again. So it is good for you to know that you don't let your cover to lapse only for you to start screaming at the agent or the insurance company. It is because you did not keep your part of bargain, which is that part of ensuring that your cover does not lapse. So you have a window period of 30 days, maybe 3 months if it's an life insurance policy or an investment. Some do have maybe longer periods, but those are the periods after which you will not be able to go back and start again. The second term that I would like you to understand, which is the reason as to why people lose money in insurance policies, is called surrender value. Surrender value is the value that is imposed on your insurance policy or investment after contributing for a certain period of time. I have explained to you my scenario and what happened to me at the beginning. My cover simply had not come to a place of acquiring the surrender value. That's why I ended up losing. Now, what I did not know in this particular scenario is that my surrender value was to be acquired after 2 years. Imagine I was only 4 months away from reaching my surrender value. I had paid for 18 months. I just needed to get to, 24 months. That is like 6 months away. I stopped at 18 months. So I only needed to just push myself for some 6 more months. Would I have been able to do that? If I understood that, I definitely would have been able to look for ways of pushing myself to those 6 months instead of losing my 18 months savings. So get to know what's the surrender value of your own investment or insurance policy that you may have taken up. After understanding the surrender value, then that will help you so that you do not come to a place of losing out your hard-earned cash. Keep to the rules, follow the rules. Each place, each house does have its own rules and regulations. So the insurance industry will allow you to make a good amount of cash, but if you follow the rules and the regulations. Number 3, I would like you to also know that you could lose out on the cash if you do not have what we call a policy document. A policy document is that certificate of ownership comparable to a title deed if you are purchasing land. So if you have taken up any form of insurance policy, ensure that you do have a policy document. Every insurance product does have an insurance policy document that will show you, it will document all the benefits that you're entitled to, and at what point you can be able to forfeit them or receive them. So make sure you do have your policy document that stipulates the rules of the game and what it is that you're entitled to and what you are not entitled to. And number 4, it's important for you to ensure that you have clear next of kin details. Almost all the insurance packages, policies will allow you to name your next of kin. Sometimes it could be a beneficiary, sometimes it can be a next of kin, or both. Ensure you avail clear information about your next of kin or your beneficiary if you want to ensure that you do not lose. Why? Remember, the topic is why people lose in insurance policies. And they lose sometimes because they did not clearly state who their next of kin or their beneficiary is. So if for whatever reason you are not there, the eventualities of life do happen, they happen to all of us, and that you are not there, your money could get lost just because there was no one you had indicated who would be payable your benefits, or you did not leave clear instructions as to who your next of kin is. So what happens with the insurance companies, the money is taken to a place called unallocated benefits, funds that are uncollected, and it stays there until at some point it becomes government money. So you could end up losing what your intention was because you simply did not provide who your next of kin was, or was not very clear about who should be contacted in the event you're not able, you're not available for some reason. So that's a pointer to what may cause you to lose your funds. The number 5, which is the last one that I want to refer to today, is you may lose out on insurance if your payments are not consistent or you have not fully made the payments that you are required to make, which is what is called premium. So if your premium is not fully paid, you may forfeit and you may lose out on your benefit until the same is paid. And I want you to take this scenario. If you are purchasing a property, let's say a tangible property like land, would you be given the title deed before you have finished making the payments? And yet many times we are expecting to be able to enjoy the full benefits of the policy that you purchased minus the full payment of the premium. I think that is not possible. So ensure if you were meant to pay per year X amount of shillings, that you have made that payment accordingly to how you had agreed from the beginning. And if that be the case, then you are entitled to your full benefits according to the policy document that you are holding. So ladies and gentlemen, those are some of the reasons why people lose money with insurance policies. And my question is, do people gain? I'm sure some of you are wondering, maybe, okay, the story that has been around in the insurance industry is that people lose more than gaining. And I want to say that it is true that people gain, and you can be one of the people that gain. However, you need to understand the reasons as to why people lose so that you avoid the reasons for losing. And it's not just in the insurance industry. I'm sure everywhere else, you will lose out on your hard-earned cash. If you are buying a house on mortgage with the bank and you have paid 59 installments and you are supposed to make 65 installments, and you are unable to continue to the 65th installment for one reason or another, the bank will seize your property and sell it out and get the difference of what it is that you hadn't paid, and you lose out what you had initially paid unless you are able to do the sale yourself. So it is not just to insurance companies. I would say it is an aspect of losing. Wherever you are trying to acquire an asset, it is important for you to understand the rules and the regulations that are involved in that particular purchase. If you like what it is I have shared with you, go ahead and like our presentation. Go ahead and like our video and give us some comments, even on Facebook, those who are watching on Facebook, and even on the YouTube. Share your comments with us. And should you wish to obtain help in acquiring an insurance policy without losing, then this is our expertise. We would definitely be happy to show you how to go about it. So until next time, you can follow us on Facebook, you can follow us on YouTube, you can follow us, you can even check us out on Google My Business and be able to find us and know what it is that we are offering you. If you subscribe to our channel, we will also inform you when we create another video like this one. Until the next video, I wish you all the best and enjoy your day. Thank you.